back to the channel. My name is Valentin, and I hope you've all had the opportunity to spend some time with your loved ones over the holidays, and that 2021 is going to bring forward a lot more positive experiences than this year has. Now, for this video, I decided to put together a quick instructional guide on how you can begin investing in stocks today with little or no experience. To do that, just like the intro said, we're going to focus on 3 qualitative steps. Step number 1 is reading the company's news. Step number 2 is checking the company's financials. And step number 3 is examining the Analyst Consensus rating. So in this particular video, I'm going to focus on 3 popular stocks: Tesla, Apple, and Zoom, which a lot of people are familiar with. And we're going to go through each one and run them through the 3 steps I mentioned. All right, let's jump in. The first stock we're going to look at is Tesla. And as we all know, Tesla is the major leader in the electric vehicle market. And they've had a tremendous run this year, upwards of 700% increase in the share price. And this is expected to continue in 2021 for a number of reasons. They've finished their manufacturing plant in China. They're trying to get exposure in India. And they've also beginning production of their gigafactory in Berlin, Germany, for exposure to European markets. So there's tons of good news coming out of this company, and no wonder investors are super happy to jump on this, train of profitability, especially when it's being led by the #1 most genius entrepreneur in the world, Elon Musk, as many people believe so. Step 1 being the company news. What resources can you use to find out the latest news about a company? So #1 is Yahoo Finance, the site you've seen over and over on my channel. So if you click on the homepage and you search for Tesla, it'll bring you here. I've already done that. Scroll down, you got a bunch of articles. These are the latest articles that are related to Tesla. Another resource you can use is MarketBeat. And if you search again Tesla and scroll down here, you'll have a lot of, it's an FAQ, the frequently asked questions, some really important questions and answers. How Tesla stock has been impacted by COVID-19. Is Tesla a buy right now? When is Tesla next earning date, and so forth. And last resource that I'm presenting here is FinViz. Once again, you click at the search bar, search for Tesla, which was what I did here, and scroll down. You've got a bunch of articles that are related to Tesla that you can read with timestamps. And of course, you can always use Google, search for Tesla 2020 Outlook, click on news, and then you have numerous articles that are related to this. So hopefully these resources are sufficient for you to kind of grasp an idea of what's going on with the company currently and what's forecasted for the future. So for step 2 from my video was the financial statement, right? Kind of doing a quick analysis, see where this company is at. And to do that is you go back to Yahoo Finance and you click on financials. And here we go, we have the income statement. Now income statement, it's actually much simpler than what it looks. And there's only basically kind of 2 or 3 things that you should look at. So one is the total revenue, and this is in thousands. Just keep that in mind. Total revenue, we have 2019, 2018, 2017, 2016, and this is TTM, trailing 12 months. So this is the past 12 months. And we have obviously costs of operating, the gross profit, operating expenses, and so forth. But what you should look at is the net income. So this is basically the sum, the money that's left over after all the expenses have been subtracted from the total revenue. So it doesn't matter if you're making billions of dollars if in the end you go negative. So for example, in 2019, they have minus 862 million here, and same thing with 2018, 2017. So Tesla actually has lost money in the past years. This is the first year that they broken even according to this. Okay, so they've made 556 million, which is very important. And this plays into the next metric, which is the earnings per share. And earnings per share is one of the most important metrics that analysts use to kind of gauge whether a company is doing well or not. And what this is it's taking the net income and dividing it by the outstanding shares. So how many shares are being owned by everyone out there. and that gives you a number. And basically, analysts are always estimating every quarter what the company's EPS will be. So in this case, Q4 2019, they estimated 0.34, but Tesla actually beat it, and it was 0.41. Same thing happened here. They estimated a loss, actually was negative 0.05. Tesla once again was able to beat the analyst consensus. And they did this all throughout the year. And what does this mean? Well, if you beat the analyst consensus, this pretty much leads to an increase in share price most of the time. If you don't meet the consensus, if you're below, you can have your share price, you can experience a drop in the share price. So these are very good earnings based on this chart here, and you can see more details, I believe, under analysis. You can scroll down, earning history, EPS trend. Yeah, so we can see in 2019, they beat it by 20%. The estimate 2020-03, they beat it by 560%. So these are huge surprises to the market, and that's why the stock rallied as much as it did. Okay, so that's basically a very general way of looking at the income statement. You can also take a look at one more metric, and that's the PE ratio, price to equity ratio. This is basically a metric that kind of tells you whether a company is undervalued or overvalued or just in the right space. Now, for Tesla, this number 1,273 is extremely high because the electric vehicle market has a PE ratio of around, I would say, 15 to 20. S&P 500, for example, it's around there to 20, 30. So 1,273, it's what it's saying is an investor is willing to pay $1,273 for each dollar of revenue for this company. So they have a lot of faith in it. And this is what this means is it's extremely overvalued since it's so much higher than what the average sector PE ratio is. So most of the time, analysts, when they see something like this, they're probably going to tell you to be very wary, hold the stock or sell the stock as it's extremely overvalued and the company's financials don't meet this valuation, right? Tesla has always had really high PE ratios and throughout time, and it's always kind of, despite the analyst consensus and believing this company is overvalued and it's going to crash, they've proven them wrong over and over again. Of course, it's been a roller coaster because this stock has been shorted a lot. So people that are betting against the company, they're pretty much hoping the company will do poorly. And you have too many people shorting a company, there's a lot of negative articles that come out there and that crashes the stock. But overall, if you look at 5-year Tesla since 2019 is just skyrocketed. It had a few dips here. This past year from $160 to $665. That's absolutely insane. And this PE ratio was there for or similar PE ratios all throughout the year. Yet the company still went strong. People have a lot of faith in the CEO and in the fact that they are a leader in this electric vehicle market. So this brings to step number 3, which was the analyst consensus rating. And if you scroll here to the side, look at the recommended trends, you have per month, December, November, October, September. These are usually forward ratings, so as in expectations for the future. You've got, so for December, 4 strong buys, 4 buys, 8 holds, 6 underperforms, and no sells. Underperforms is pretty much, it's between hold and sell. So overall, the consensus rating is 2.8. That's between a buy and a hold. We're more towards the hold. So what that means is if you own the stock, they're recommending that you hold on to it, so you don't sell it or you don't buy more of it. Now, for somebody who doesn't own the stock and is looking to get into the market, the numbers at face value without knowing any news are not very promising because there are a lot of hold ratings, as you can see here. However, the earnings per shares have been very, very positive. So this gives you some confidence. But if you take this and read all the news about the company and how they're planning on producing all these gigafactories across the globe, and they successfully delivered on some already, you know the company has a lot of potential upside for the future. So another good website to check Analyst Consensus is MarketBeat, and you can search for Tesla in here, which I've done. You can read the analyst opinion. This is the consensus. They gave it a rank 1.4 out of 5 star. That's not good. And it tells you here that the consensus target price for Tesla is $296. This is very little. That's 55% downside from the current price. So they're estimating in 12 months, this stock is gonna have, this is just their opinion, by the way, doesn't mean it's gonna happen. So take it with a grain of salt. On Yahoo, the 1-year target estimate is 411. So it's not as bad as 295, but it's still beneath what it's at now. And going back to MarketBeat here. So what you can do is you can click on, where is it, analyst ratings, and read what today's ratings are and 30 days ago and how those change. So you can see the consensus is a hold based on 11 sell ratings, 13 holds, 8 buys. And this is at the target price is 296, 30 days was 277. And it shows you, you scroll down, which brokerage give it what rating. So these guys outperform and they changed their target from 516 to 788. CFRA, strong buy to a hold. This was a downgrade, and so on. Buy to a hold, another downgrade, and some of them include target prices, others don't. So you can take a look, kind of form your opinion. So again, these analysts are very conservative. There's more bears than bulls, as in they're kind of looking at the company's valuation, which is extremely high based on the revenue, and they're saying it's only a matter of time until a crash. So be wary. Hold it, don't buy more, you're taking a risk. That's what they're saying. Okay, so that's the case of Tesla. Let's move on to Apple and see what that looks like. Search for Apple Inc. So Apple is sitting at $134. It's had a huge rally this year as well, 79 to 134. It's done really well. The 1-year target estimate is 128, so that's slightly below this. P ratio of 41. So this is more realistic. This is more in line with what the technology PE would be. Probably it's 30, so it's a bit higher, but it's definitely not overvalued. And if we go over here in terms of the earnings per share, it in Q4 it beat the target consensus estimate. It beat it again in Q1, Q2, Q3. So overall, Apple's been doing very well. Also, in terms of financials, the company's been, you can see the revenue versus earnings. So earnings are basically the money that's left over after all the expenses. They've been in the positives every single year. Tesla's had negative earnings in most of these. Now, in terms of the recommend consensus ratings, we have mostly strong buys and buys. So you can see the overall is a 2, which is a buy. It's a little bit ironic that they're recommending this to buy the stock, but the average target price is lower than it is now. But again, these don't necessarily have to match. So overall, most of these analysts are saying this is a buy, and it tells you here some of the upgrades or downgrades. So majority say maintain, so keep the same rating. They did not change it. Again, you can read the articles on Yahoo Finance and do the same thing on the others. So we're going to quickly check MarketBeat, search for Apple here, and see what MarketBeat has to say about Apple. 2.24 out of 5 stars. This is still not a high rating, but it receives a consensus rating of buy, so just like Yahoo Finance. And it's based on 26 buy ratings, 14 hold ratings, so almost no sell ratings. So that's very good. Most analysts want you to buy and the other 14 to hold on to it. And they're expecting a target price of 117, which is, again, it's 13% lower than what it currently is. But again, what this tells you is within that 12 months, it might end up there, but it doesn't mean it's not going to surpass the current target price. So it's not too alarming. And if you scroll down, again, we have the frequently asked questions. Well, let's just quickly go on to the analyst ratings. So today we have, again, this is the buy, and these are the target prices that we see. And institutional ownership in Q4, we see 230 billion bought. So that's good. So institutions are buying these in large sums, way more than sold. And here are the market values of the shares that were bought and what the changes in these shares were for each of the institutions. And you can just scroll down, you can see everybody just bought. So they're estimating a positive trend coming up in 2021. That's basically what this is. You can also look into the insider trades. So these are certain people with inside trades, and we can see a lot of actually sold shares. And while this appears alarming, like all the insiders have sold, they didn't buy anything, that's because tons of people have taken out profits. Tesla's looks exactly the same because the stocks have reached new highs. They just wanted to capitalize on it and take all these profits. So that's just for you, for your interest, if you want to check that out. Okay, so last but not least, we're going to go over Zoom. Zoom is a 353. They've had a wonderful year for obvious reasons, partially because most people benefited from virtual work, and Zoom was the #1 telecommunication software to use that. So that's why this company became very relevant. I believe if you look at the 5 years, it's pretty stagnant up until now, up until this year. So the 1-year target estimate for Zoom is actually 487 from the current 353. So that's a huge upside. This is the highest estimate we've seen from the 3 companies. P ratio of 245. Now, this is a bit overvalued. Tech stocks, though, they do have high PE ratios, but not this high. So again, the company is on the overvalued side. And if we look at the earnings, it beat the consensus EPS every single quarter, and it's probably going to beat it again in Q1 of 2021. Jump to the financials and look at the net income. We have positive income across the board from 2019 up until now. They've been in the positive, so that's good. And back to summary. Let's look at the recommended trend. So this is the consensus rating. So we have strong buys, and then most say hold here. And therefore the recommended rating is a 2.4. It's between a buy and a hold, but more towards a buy. And the average share price of 487, as I mentioned. And these are the downgrades. There's only one downgrade, JP Morgan. They switched it from an overweight to neutral. So this was slight buy to neutral. That's not that bad. And the rest of them maintain their analysis, which is outperform. This is again like a buy, hold, overweight, underperform, and equal. So that's what Yahoo Finance says about the stock. Now, Zoom Technologies, they're an innovative company, and most likely the trend of working remotely is going to continue in the future in 2021. So I agree with this 1-year target estimate. It looks promising for the next year as well. And if we go on to what is it? To Market Beat and search for Zoom. I haven't never seen a stock that has a 5-star rating here. So this is always they gave it a 1.3 out of 5. And let's see here. It says, according to the Analyst Consensus, the price target is 435. So this is again similar to what we saw in Yahoo Finance, an upside of 23%. And the consensus rating here is a hold. And we can check that. Analyst rating. We have a hold. It was always a hold, including today, but the target price is pretty high. So you can, in my opinion, there's still room for growth, because we're seeing a high target price across these 2 different websites. So even though it says hold, you could probably still buy it and make some profit off of this. And we can look at institutional ownership. What they've been doing, well, they've been mostly buying throughout this year, a few sold, but mostly buys. And these are the amounts. This is 21 million. So look at the biggest numbers here. This person sold. So these are, again, some institutions took profits. And most of them have bought in, though. Okay, well, I really hope you enjoyed this quick analysis. Stock investing can be quite complicated once you get into the quantitative chart analyses that more advanced investors do. They basically looked at momentum trading and try to kind of time the market when they're using these momentum indicators that help them time the market when it's the best to buy or sell a stock based on these chart analyses. We're going to go a little bit into that later on in the channel, but for now I decided to just do this quick analysis that you can do without any experience from your home. I hope this helped you, and I'll see you in the next video. Ciao.